I want to say a couple of things before I begin. Number one, I'm not a financial advisor any longer, and this is not financial advice. I'm not going to tell you what to do or what not to do. That's number one. Number two is I'm really not an expert in this subject matter, but I have been studying it regularly, and I mean regularly, for several years. I do know enough to make me dangerous, and I'm going to give you what my thoughts are on it. I'm going to share a couple of general things. I'm going to give you some additional resources for you to, do some research on your own. And then, of course, I'll open it up for any questions that you may have. It's funny, Steve Fata is on the line. So, Steve, of course, is our director of technology at BSP, and he never comes on the BSPU calls. But Steve and I have been talking about and involved in cryptocurrency for a number of years, not as fast as we would have liked. We actually were first introduced to Bitcoin in, I think it was 2011. Steve says hi. Type in, Steve, was it 2011 when we first heard about Bitcoin through Link Emperor? Somewhere around then. And of course, it was just a blip on the screen. We didn't know what it was. We didn't pay a whole lot of attention to it. I wish we would have, because I think Bitcoin was under $100 at that time, or somewhere around then. What I want to do is I want to spend a couple of minutes explaining why I'm talking about this topic. And 2012, Steve thinks it was. Yeah, that sounds about right. I want to talk about why. I have a bunch of different notes. I want to share some of my original thoughts and also how some of my thoughts have grown. I want to share, just some of a very kind of loose interpretation of where we're at, maybe in the cycle and the tech behind it. And then, as I said, I'm going to share with you a good bit about, maybe some influencers to follow and people that are a lot smarter than me in the space that you should pay attention to. So why am I talking about this when clearly our BSPU calls are much more focused on growing your authority, using your books, becoming a bestseller, driving leads, growing, your businesses? Well, I took the plunge into Bitcoin and cryptocurrency in 2017 because I was in a mastermind. And I was in a mastermind with somebody that actually I'm doing a book for, that he paid in Bitcoin, which I'm so grateful. It's going to be, that's going to be a cool story. It already is a cool story, but it's going to be an even cooler story one day as Bitcoin continues to grow, in my opinion. And around that same time, my middle son, Jake, who works for Jet Propulsion Laboratory in California and NASA, told me about this cryptocurrency called Ethereum, and he had purchased it around $7, and it was really starting to explode. And I had heard about Bitcoin. I didn't really understand or know very much about Bitcoin and this entire cryptocurrency market. So I was in this mastermind. I was out of town. I was in Las Vegas. It was a very small group, about 10 of us. And coincidentally, I had talked to my son Jake about Ethereum, and I said, okay, look, I just grabbed him and I said, I want to spend like a little bit of time with you. We're in a small group. We're on a break. Tell me what you can tell me about Bitcoin, about the market. Help me to understand it, because, here I am face to face with one of, the people that is a kind of an OG in the Bitcoin space and is, a multimillionaire at this point. And so he sat down with me. He explained it at least enough to where I could understand it. Talked to me about purchasing it and how to most easily purchase it, which was much more difficult then than it is now. And it was even more difficult early on. And shared with me about how to store my Bitcoin, and basically the bigger idea and theory behind it. And so I thought to myself, I have at our live events, I've talked in a joking manner and then more serious about Bitcoin and cryptocurrency. And I thought, look, you are my Bitcoin family. And I have a lot of convictions about this space. They're my personal convictions. But I thought, if this mastermind that I was a part of has helped me make a lot of money, and I think it's just beginning, then I really want to pass on at least a little bit of what I've learned and what I know to all of you. So that's kind of my why behind it. And obviously, timing is everything, because the market is really growing and exploding right now. Around 2017, one of the kind of revelatory things that happened with me, that, for the first time in my life, I felt like, okay, I'm watching something like the internet, that maybe it's not the first time, second time perhaps in my life. And I understand it, and it's like 1992 in the internet. And I feel like I'm at the beginning of this big wave. And one of the things that really opened my eyes to it when it comes to its real usability was, coincidentally, I purchased something, a couple of different somethings, overseas. And one of the parties that I purchased this five-figure, 10, $12,000 thing, wanted me to wire funds. The other person was willing to be paid in Bitcoin. Now, I wish I didn't pay him in Bitcoin. I wish I kept my Bitcoin, but that's another story. This all took place in the same 7-day period. And I've told this story in some of our live events when I'm talking about understanding technology and really applying things and trying to get in on the early adopter stage. But I had to wire money, and you understand this. I had to drive to the bank, which already I was annoyed with. I have a private banker. I have a great banking relationship with Wells Fargo. Millions of dollars flow in and out of Wells Fargo regularly through my businesses and personal accounts. And I still had to drive to the bank for just a $10,000, $12,000 wire. I had to sit down with a banker. The banker printed forms, physical paper, came to me. And if you've had to wire anything in any length of time, this is how it works. I had to give the information, the data. I had to sign the paper. It happened to be later in the afternoon. So my money didn't even get to the person I was wiring it to the next day. It got there the day after because it was overseas. That same week, I had to wire about the same amount of money. Wire is not the wrong word. I had to send about the same amount of money in Bitcoin to a person that was overseas, and it took 5 seconds and cost me under $5. And I thought, okay, this is a broken system. This idea of Swift, the Swift technology, and wiring money is a broken system, and broken systems always change and always turn. Why do I need a bank? Why do I need a third-party institution, right? When I have a trusted person I'm sending it to, and I'm a trusted party, right? We agree with each other. Why do we need this third-party institution to get involved and charge me? I think they charge me $90 to wire the money, charge me to send money, and take 36 hours to do it, and be so incredibly inconvenient. And I thought, you know what? This makes sense to me now. Like from an actual use case, it makes sense to me. Now, I did that with Bitcoin, but that, in my opinion, is not the primary use case of Bitcoin. And I'll share more about that in just a moment. However, you can use Bitcoin and other cryptocurrencies in a much simpler manner than you could ever transfer money from a bank to another bank or from a party to another party and pay the fees. Similarly, we use Stripe. And those of you that have businesses that accept credit cards, you have a merchant provider. That merchant provider takes 2.5 to 3.5% of every transaction that is being charged. I don't need to tell you, but that is 6 figures in charges a year to my company. That is a ridiculous, this is every year, a ridiculous sum of money that I am paying to Visa, MasterCard, American Express, simply to be the middleman that I do not need. Cryptocurrency is going to disrupt these industries. It's going to disrupt the banking industry because it is broken. It is going to disrupt the payment industry because it is broken, and because we are being fleeced in these industries in a number of different ways. So that's a little bit about kind of my own personal conviction, the things that I've seen, and giving you like some actual use case of it. Let me share my screen and just share a little bit of the idea. Now, any questions that you have in general about Bitcoin crypto, then, please ask them, whether it's along the way or whatever, and I'm happy to get to them and answer them. But let me share with you, I am almost, not quite, but almost what someone would call a Bitcoin maximalist. What that means is that most of what I believe in is Bitcoin. I have about 83 to 85% of my holdings of all cryptocurrency in Bitcoin. I have about 10% in Ethereum. And then the other 5% or so are scattered $500 here, $1,000 there, $2,000 there, amongst probably 20 other cryptocurrencies that do something completely different than Bitcoin does or that Ethereum does. And I'm going to explain in a crude way my understanding of Bitcoin, my understanding of Ethereum, et cetera. So let me share my screen and let me share a couple of things with you in a general sense when it comes to Bitcoin and understanding kind of where we're at. A lot of people, I think, are afraid because you're on this because probably you either know a lot about it already, or you know some about it, or you've seen some about it on the news. And you probably think you're already too late to the party to make any money with Bitcoin or with blockchain. The truth of the matter is there are probably worldwide, best guess would be 100 million users of cryptocurrency worldwide. We are in the innovator stage of this S market cycle, meaning that the vast majority of people in the United States do not own Bitcoin, do not understand Bitcoin, aren't going to buy Bitcoin. Worst case scenario, you are, if you're interested in getting involved yourself now, you are an early adopter. This is like the internet was in 1995 or 96. We're going to see some bubbles. We're going to see, a great deal of highs and lows. But if you think with a longer term horizon, just like, buying Amazon prior to the bubble and then watching it go up and then come all the way back down might have scared you, but had you held Amazon stock over that period of time, imagine where you would be now. The same with Apple, the same with Dell, et cetera. It is a technology that we are on the cusp of. So don't be afraid that, okay, Bitcoin is $27,000 right now. I've missed the party. I wish I could have bought it at $1,700 when I did, or $100 when other people did. And by the way, I bought my first Bitcoin at 1,700, but I have purchased Bitcoin for as much as 11,000. Now I have what they like to say in crypto land, I have my bags, meaning that I have an allocation that I am comfortable with and that I am looking forward to seeing where it goes. Will I continue to buy? I will, but probably not large amounts, because I already hold a large amount of my net worth in cryptocurrency. Okay. So as far as adoption trends, we are still in the very early stages of the adoption of Bitcoin and cryptocurrency. How does Bitcoin work, and why does it have a value? Oh, you know what? That's the one chart that I don't have and didn't pull up. Okay, maybe I can pull it up later. So here's what Bitcoin looks like. And let me see if I can move your image. So, because I have all of your images blocking my screen. So here's a little bit of understanding how Bitcoin works. So Bitcoin, think of Bitcoin as gold 2.0. Bitcoin is something that is mined. And the way Bitcoin is mined is high-powered computers mine Bitcoin by solving complex math problems, okay? And so every 10 minutes, a block of Bitcoin is mined by millions of computers. Bitcoin is the most secure computer network in the world, okay? Because it is completely decentralized. There are millions of computers around the world, millions of users that are using their computer setups to mine Bitcoin and keep the network secure. In the early days of Bitcoin, back in 2010, 2011, Bitcoin had very little value because the network itself was so small. Okay. I'll talk for a moment about Metcalfe's law and explain about the growth of the network equaling the growth of value. For those of you that know what Metcalfe's law is, you already know what I'm going to say. But what happens is Bitcoin has a fixed supply of 21 million. So it makes it the hardest asset, if it is an asset, we believe that it is, to ever exist in mankind, meaning that there will only ever be 21 million Bitcoin mined. As of today, we have about 18 million of those 21 million already mined. Because in the early days, there was 50 blocks every 10 minutes being mined. And what happens is roughly every 4 years, these lines that you see is something called the halving or the halvening. The halving or halvening is where the number of Bitcoin that you can mine gets cut in half. So the first one occurred around 2013, and the block reward went from 50 Bitcoin in 10 minutes to 25. So something happened. You see, a supply shock was created in Bitcoin. Every 4 years, a supply shock gets created. See, markets create equilibrium because the number of buyers and the number of sellers are about the same. So if the stock market is 30,000 and maybe it goes up to 30,172, what happens is you have a tiny, tiny bit more buyers than you do sellers. So the stock market is rising. Now, there's also lots of reasons. The Federal Reserve is printing money like it's going out of style, which is another reason that Bitcoin has value. I'll share more about that in a moment. But with Bitcoin, what happens every 4 years, and it's programmed into the code, is that the block reward gets cut in half. So Bitcoin will actually continue to be mined all the way to about the year 2140. So we have another 120 years of Bitcoin being mined. However, most of the world's Bitcoin has already been mined. So the supply shock, as more and more people come into Bitcoin to buy, becomes really accelerated every 4 years. So earlier this year, around May of 2020, we had, and this graph doesn't take it to where we are right now, but we had another halving. And the block reward went from 12.5 to 6.25. So we had all of these buyers that created this equilibrium. And now you are only able to get half the number of Bitcoin that you were getting before, which means the Bitcoin itself, as long as the number of buyers stays the same or increases, goes up considerably. So Bitcoin has something that no other asset, including gold, has, and that is a fixed supply. Right now, gold, if gold price went up to $5,000 an ounce, it's about what, 1,900 or so an ounce right now. If it went to 5,000, do you know what would happen? The miners would be incentivized to dig more holes to mine more gold. They would find more gold reserves so that they could pull more gold out of the earth and sell it on the market. With Bitcoin, they can never do that. If the price continues to go up, it doesn't matter. The amount of Bitcoin will actually, that is being produced, will actually decrease. So it creates this deflation rather than inflation, okay? Where because of the deflation of the currency, it makes what is there much more valuable. Okay, I hope I'm explaining that well enough for everybody to get, but because that's a really, really important factor in the value of Bitcoin. Now, when it comes to Bitcoin, I don't need to share about the ledger. Let me see if I can go back here for just a moment, because I had a couple of I had a couple of other links that I wanted you to see. No, it's not that. Bear with me. Here it is. So one of the things that traits of money, this was, I wanted to share about this earlier. I kind of passed it by, but this whole idea of, what is money? I remember, I think I was probably 30 years old or in my 30s before I really understood for the first time that money, it really doesn't exist. Like it's nothing more than an idea. It's an agreement that we have with each other as to what the value of that is. But there are certain traits of money. Now, not all of these traits I need to explain, but money needs to be portable, meaning that you need to be able to carry it around, right? It needs to be durable, meaning that it can't be destroyed very easily. It needs to be divisible, right? Because, in the days when we would have to trade a sheep and a cow, how do you divide a sheep and a cow? It didn't make sense to do that. It needs to be secure, easily transactable, scarce, etc. Well, gold has some of these attributes, and that's why gold has been a store of value for 4 to 5,000 years. Gold is not non-consumable. It's not very portable, to be honest, right? Because, if you want to carry $10,000 worth of gold, it's going to be, 5 ounces of gold that you're going to have in your pocket. If you want to carry $100,000 worth of gold, you're going to have, pounds of it potentially in your pocket. It's very durable. However, it's not easily divisible. You can't just shave off a piece for a Starbucks cup of coffee. Fiat, on the other hand, which is any dollars or any denomination that's printed, the euro, Canadian dollar, the US dollar, that's fiat currency. It's not tied to gold anymore. That ended by Richard Nixon in 1971, right? That's when Nixon took the US dollar off the gold standard and said, we're going to print as many as we want. The dollar will stand alone. Okay. That's a fiat currency. So fiat currency has several of these that make it a very, very good source of money. However, it's not scarce. And for those of you that pay attention to what the Federal Reserve does, we have printed more dollars in 2020 than ever before in the history of the United States. In other words, we created money out of thin air. And in fact, 20% of all the money that the United States has ever created, 20% was created in 2020. What that means is eventually, because we have more and more of it, it becomes less and less valuable, right? Which is the exact opposite of Bitcoin. As more people use it, and because it has a fixed supply and is scarce, it becomes more and more valuable. The reason that, and there's lots of them, but the primary reason that the Federal Reserve wants to create a 2% inflation rate is because what they try to do is they try to punish people that save money. What they want you to do with your money is not save it. Because if you save $10,000 in your mattress in 1950, 70 years ago, and you pulled out of your mattress today, that $10,000 70 years later, it would be, you could have bought 3 houses in 1950 for that $10,000. Now it's not enough for a down payment on a house because the dollar has continued to lose value. So what they punish you for that by inflation. What they want you to do instead is either A, invest your money in the market, the stock market, that's why it continues to go up, or they want you to consume it. They want you to spend your money back in the economy. They don't want you to save it. They don't want you to put it in a savings account, and you shouldn't. So you need to find a place, because fiat currency is not scarce, you need to find a place that is scarce. It could be real estate. It could be the stock market, right? And now the newest kind of asset, cryptocurrency. Bitcoin, except for one area here, government issue, which it's not government issued. Bitcoin is all of these things. It's the best kind of money, quote unquote, or store of value that's ever been created. Now, again, this is all my opinion. I'm not a financial advisor. This is not my expertise. I'm the book guy, right? Don't listen to me about this stuff. I'm giving you my opinion on what I've studied, what I've seen, what I know about the facts here. Okay. Let me see if there was anything else here that I missed. Adoption trends, having, I think I got that one too. Okay. Yeah, I did. Good. Okay. So I'll come back to the Nano Ledger, but let me stop sharing for just a moment. Uh, so there are a couple of questions, and I'll share more. I want to talk to you about influencers to follow. I want to talk to you about why it's going up, Metcalfe's law, that kind of thing. But James asked a couple questions. Can you speak a little bit about the volatility of different cryptocurrency types, and what will quantum computing do to Bitcoin mining? So great questions. Let me answer the second one first. So I'm not a quantum computer expert. I don't know if we have one on. Perhaps we do. But here's what I will tell you about quantum computing. Could a quantum computer potentially crack Bitcoin and crack your Ledger Nano and your Bitcoin wallet? Well, if what I understand about quantum computers is correct, then yeah, I think it could. However, where is there more money stored right now for a quantum computer to go after? Wells Fargo? Right? Like, how about all the bank accounts? I think Wells has like 7 trillion in assets. How about all of the, billionaires' stock accounts? In other words, if quantum computing will have, if there's the ability for quantum computers to crack Bitcoin's base, then Bitcoin is such a small fry when it comes to all of the assets that, believe me, Wells Fargo, Chase, JP Morgan, Merrill Lynch, et cetera, they are all going to be incentivized to find a way to make sure that quantum computers cannot crack this code. And they'll use quantum computers to battle quantum computers so that the network stays secure. In other words, it's not anything to worry about with Bitcoin, because if that were to be a problem, then we would have much bigger problems in the world. Like, if a quantum computer could crack the most secure computer network in the world, which is Bitcoin, then what they could probably also do is crack the Defense Department and launch nuclear missiles, right? So there are much bigger fish to fry when it comes to quantum computing. Steve says Bitcoin devs are already working on solutions for this, as everyone is, right? Because, the US government has much more valuable resources that need to be protected from quantum computing than my, measly savings in Bitcoin. Okay. So that was the second part of your question. Let me answer the first part of your question. Can you speak a little bit about the volatility? So, because we are in the early adopter stage, there's going to be huge volatility. Now, remember what I showed you about the halving. What happens after every halving is this supply shock, right? Remember, it's a supply and demand market. And so because there's a supply shock, half the amount is cut off, right? The inflation rate drops by half every 4 years. If the number of buyers just stay the same, then now there has to be this kind of volatile increase, because the supply shock of only half being produced is going to impact the market. So this is baked in to the Bitcoin ecosystem. Now, here's the interesting thing is it's a little bit of game theory that's playing out. Right now, the reason that Bitcoin has accelerated so much in its price, it just cracked. It was kind of fun. It just cracked its all-time high on my birthday, December 16th. And since that time, it's like mooned. I mean, it's gone up another 30, 40% since that time. Why is that? It's not because retail investors. What's happening right now is institutional investors, and this is what's making it so exciting, are now buying hundreds of millions of dollars in Bitcoin at a clip. Instead of, I gave my 2 older sons, because I didn't see them, I gave them a cash gift. And I said, what I'd like you to do is I'd like you to take half of the cash that I'm giving you, open up a Swan Bitcoin account, and start dollar cost averaging into Bitcoin. I've been talking to you about it for a while. In fact, Jake, you were the one that told me about Ethereum at $7. Ethereum's now $700. It's 100x since my son told me about it, right? But, he's young, and so he doesn't know, right? So, he's like, it'll be fine. Hopefully they did it. But you know what? The market is not going up on their $500 in Bitcoin purchase. The market is accelerating right now because there are people that are putting vast amounts of wealth. There are hedge funds that are now starting to buy because they're starting to open their eyes as to where Bitcoin is going to go and what can potentially happen. There are crazy predictions for 2021 for Bitcoin. The lowest, and I'm talking about predictions from major players like JP Morgan Chase predicted a $650,000 Bitcoin at the end of 2021. JP Morgan predicted that. So there are some crazy predictions because of what some people are calling a wall of money coming into Bitcoin first, probably Ethereum second, and then lots of other projects, right? Those are the two. That's kind of the gold and the silver, if you will, of this index, right? Think of the cryptocurrency market like the commodities market. The commodities market has, palladium and platinum and all these other different kinds of commodities, but the king and queen are Bitcoin and Ethereum, gold and silver, if you will. They serve very, very different purposes. Let me see if I can answer a few more questions. So Dr. Atusa says, but Bitcoin is not insured. It is not insured. It is the Wild West right now, which is why the early adopters and the innovators are the ones that are taking chances on it. However, since you asked, let me share my screen, and you need to do a little research into this on your own. But this is, Bitcoin is like, I think it was Barack Obama who actually said this. He didn't say it favorably, by the way, but he said that Bitcoin, the scary thing about Bitcoin and cryptocurrency is it's like everybody having their own Swiss bank account in their pocket. And he didn't mean that in, wow, that's great for everybody. No, it's the rich. It's the richest of the rich that control their money and have their own Swiss bank accounts. This is what I use, a Ledger Nano. I have a Nano S and a Nano X. And this is the bank account. This is what's called cold storage. So you can purchase your Bitcoin on an exchange. You have to purchase it on an exchange. There are other ways, but let's just keep it simple. So one of the exchanges is called Coinbase, COINBASE.com. Coinbase will attach your bank account. They'll want proof of who you are, like they'll want a picture of your ID. They want to do all the what's called KYC, know your customer information, because they're concerned, right, with the government being on top of people about funding terrorism and using crypto for illicit purposes. They want to make sure who their customer is. But once you buy your Bitcoin, the suggestion is that you move your Bitcoin to a product like this. The Ledger Nano X is like a little hard drive, but it's specially created for Bitcoin and a number of other cryptocurrencies. And literally, you have a little computer program, you plug it in, you have a code, you have a password, you put it in on your ledger, and you can transfer any amount of money. You can take all of your Coinbase holdings, everything you bought on Coinbase, and move it over to your ledger and just store that in a safe deposit box or whatever. Now, there's a number of safety protocols, et cetera. They give you a 24-word phrase, but this is your insurance, Dr. Tusi. Your insurance is, you have your 24-word recovery phase. And Steve, I don't think I ever told you this, but here's what happens with the ledger. I didn't go into my ledger for like 2 years because Bitcoin came off a terrible bear market. So I had my Bitcoin in there. I paid no attention to it. I was barely in the profit. It made no difference to me. Well, Bitcoin started after the halving. It really started growing, which is what we all expected because of the supply shock. And so I went into my ledger and I typed in the password wrong 3 times. If you do it 3 times, it resets everything. You lose everything. I was mortified. I was terrified. So what you have to do then is you have these 24 random words that you have to write down on a piece of paper or put somewhere safe. And those are your recovery phrases. You can actually, as long as you have those 24 words, you can buy a ledger off the shelf. And you don't have to have it on that particular hard drive. And those 24 words will make your Bitcoin or your cryptocurrency appear in that particular ledger, right? That particular nano. And so I had to use my recovery seed, and it worked like a charm, and everything was recovered and there was no issue whatsoever. I was terrified. So this is your insurance account, is that you're holding your money yourself. You're holding your Bitcoin yourself. I hope that makes sense. Let's see here. Steve may be answering some questions as well, which is great. Craig says, where are your best resource sites to learn more? I remember when some people had tech issues a number of years ago and had their Bitcoin stolen. I understand it's better now and blockchain solved it. Who do you buy through now? So there's a number of different exchanges. PayPal just started offering to buy Bitcoin and cryptocurrency through PayPal. That's probably an easy way to do it. The only thing I don't like about that is you don't get to move your Bitcoin. They store it for you. I don't like that. I'm still a little, conspiracy theorist deep down. I want my Bitcoin in my cold storage. I don't want PayPal hacked and me lose my Bitcoin. So Coinbase is great. Any exchange, and probably Coinbase, they're a little more expensive than other ones, but they're probably the best known. I would use Coinbase, and then I'd move your Bitcoin off to your own cold storage device, your Ledger Nano. You keep it in a safe deposit box. You keep your password separate from it, right? So no one else can break into it, et cetera. As far as other resources, since you asked the question, why don't I just share my screen and let me show you a couple of resources that I think it would be good for you to pay attention to that are much, much smarter than me when it comes to this kind of stuff. So I pay attention to a couple of guys in the market. Raoul Paul, that's his name right there. He runs a company site called Real Vision. Here it is right here, Real Vision. So Real Vision is, a YouTube channel. They have a paid subscription. You don't need to worry about the paid subscription. And what I would suggest you do, this guy was a hedge fund manager for Goldman Sachs. Okay. So he's a fabulously rich person. And in the last 6 months, he has sold all of his gold, all of his equities, and he has almost all of his net worth in Bitcoin because he believes Bitcoin is the future. He believes Bitcoin is going to hundreds of thousands of dollars a coin. So anything that you see from Raoul Paul, fantastic. Real Vision, fantastic. This person, Michael Saylor, right here. Michael Saylor owns a company called MicroStrategies. He's a self-made billionaire, and he learned about Bitcoin first in 2013, didn't buy into it. Just this year, he has converted all of his company's treasury reserves, over $1 billion into Bitcoin. He's already made $500 million this year on how much Bitcoin has gone up. He is part of the new wave of large companies and institutional investors coming into the market. Okay. Now, there's a lot of other channels that are great. These two individuals are some of the smartest people in the space. Okay. What are some other channels? Let's see if I can show you some other channels. Crypto Zombie, smart guy. A lot of these guys are traders. I don't recommend you trading Bitcoin. 95% of all traders lose money, and you will be part of the 95% unless you're a killer and you know what you're doing. I don't trade. I think of it as a buy and hold strategy. I'm watching the market go up. I think of it as long-term. Do I believe in the technology or not? Stansberry Research, fantastic. They talk about not just cryptocurrency, but other assets, but a lot more about cryptocurrency lately. And I'd probably say Data Dash is another one. Steve might give you a few more, but I would maybe type in Raoul Pal and Bitcoin into your search bar, or Michael Saylor and Bitcoin in your search bar, and you can go down a pretty significant rabbit hole just doing that and learn from some really, really smart folks. Let's see here. Let me see what other questions we have. That was a great question, by the way. Beverly says, hi, I have a Bitcoin wallet. Would you recommend that I sell my products, et cetera, in exchange for Bitcoin? So, you know, I love that idea. You know, that person, and I won't say who he is because he's still a client of mine, hadn't finished his dadgum book yet, and I've been pushing him to do it. That person is an influencer in the Bitcoin space and kind of an OG in Bitcoin. And I said, look, I'll give you a discount. He wanted to do a book. So it was like, okay, let me ask you everything you know about books and marketing books. And you ask me everything you know about Bitcoin, and we exchange that information. At the end of that, I said, look, here's what I charge to do a book. I'll give you a discount if you pay me in Bitcoin. And he agreed to. At the time, it was 3 Bitcoin that he paid me, which I think Bitcoin was worth like $7,000 Bitcoin. And so, you know, our typical program at that time was like 25,000. It didn't include all the PR and media and all that stuff. And so I gave him like a $4,000 discount. Well, guess what? It's not so much of a discount anymore. I still have those 3 Bitcoin, and now those 3 Bitcoin are worth $81,000. I believe that that's going to be $1 million book. That I sold a book for $1 million. That's what I believe. I think Bitcoin is going to go there and maybe even higher than that. So, you know, it's hard to get people to pay you in Bitcoin because most people are not prepared for it, right? But if you can, oh man, you know, any of you that want to pay me in Bitcoin, I'm open to it, by the way. James, security side, will quantum computing and supercomputing in general drive other Bitcoin miners out of the market due to speed, or will it drive down mining costs? So great question, James. So one of the beautiful things about Bitcoin and mining is, well, it looks like Steve already answered that. So the way Bitcoin is coded, the miners drop out the algorithm. Yeah. So the algorithm adjusts, and you know, right now, the miners that they're using are like 100 times faster than the miners that they were using in 2012. But guess what? It's harder than ever to mine Bitcoin. So it's going to, you know, it doesn't matter what the computing power is going to be. The algorithm will adjust to deal with it. So great question. Let's see. So Joyce says, so Bitcoin could close at 650,000 per Bitcoin by December 31st, 2021. You know, Joyce, there are a lot of predictions, and that is one of the predictions. Let me see if I could even pull that up and show you some of them here. Twitter, one of the guys on Twitter compiled a bunch of them. And this was just like the day before yesterday. And I thought, holy cow. Let's see here. Bitcoin predictions. Let's see. Let's see what pops up, and let's see if we get something right out there. There was a great meme on it that just showed all these different Bitcoin predictions. It was an image. There's tons of stuff on Twitter, by the way. You could go down a pretty deep rabbit hole when it comes to Bitcoin on Twitter as well. Let's see. Bear with me a second. If I don't see it in another moment, then I'll keep looking for it while Steve and I answer some questions for you. Steve and I were having a talk about cryptocurrency today. And, you know, I mean, it's really cool how, how cryptocurrency has made a difference, how Bitcoin in particular and a couple of other cryptocurrencies have really made a difference in Steve's investing, and how far he's come. So I'm really proud of him. Okay. I don't see anything right at the moment on that. There were a number of really great predictions about it, but I don't see them. So I can maybe look for it and post it. That was the most aggressive one that I'd seen, 650,000, but that came from JP Morgan, you know. It was, Steve, it was, believe it or not, for the end of 2021, which blows my mind. Let's see here. Crypto Zombie for news. Yep. Anthony Pompliano, thank you. I actually pay for Anthony Pompliano. He does a daily recap of the cryptocurrency market. So Anthony Pompliano, it's A Pompliano on Twitter. Anthony Pompliano is another kind of Bitcoin original, and he has his own hedge fund that that invests in cryptocurrency. Really, really smart guy. He was one of the more aggressive ones. He said that we would have a $100,000 Bitcoin by 2021, back when Bitcoin was $3,000 and everyone was laughing at him. And now, he's still saying it's probably going to be around 100,000 or 150 or something. And so he's like the conservative guy. The guy, he was the guy that everyone was laughing at because he was like, it was pie in the sky, and now he's the conservative guy. Woonomic, at Woonomic on Twitter, is fantastic. That's Willy Woo. Willy Woo actually is predicting a $200,000 Bitcoin at the end of 2021 as well. He uses what's called on-chain metrics. The cool thing about Bitcoin is that Bitcoin and cryptocurrencies, everything can be seen. So in other words, the blockchain itself, you can see every single thing on the blockchain. Now, you have a wallet, and the wallet doesn't say it's owned by Rob Kosberg or Beverly Powers or Joyce Lacey or anything like that, but there is a wallet attached, and everybody, the blockchain has the data on every single wallet of every single user of Bitcoin. So you can trace and track exactly what's happening with on-chain fundamentals. So one of the fundamentals that they look at a lot right now is the amount of money that is being put into exchanges to buy Bitcoin, and then that Bitcoin is taken off the exchange and put in cold storage. The reason that is an interesting metric is because people sell on exchanges. If the crypto isn't on exchanges, then they're not selling that. And if they're putting it in cold storage, their idea is to hold on to that crypto long-term, or at least longer term. And so right now we have more Bitcoin coming off exchanges than ever before. And what that's saying to the people looking at the on-chain metrics is that Bitcoin is going to continue mooning and going up in value. Couple of other things. So what makes Bitcoin valuable? Bitcoin is a network. Like any money, it's an agreement, but it is a network. So why is Mark Zuckerberg worth, what is he worth? $60 billion? Why is he worth that? Well, he's worth that because the network of Facebook has 2.5 billion users on it. When it had 200,000 users, he wasn't worth anything. When it had 2 million users, he was starting to get a net worth. 20 million, 200 million, 2 billion. Now, Facebook is worth, I don't know, what's the market cap of Facebook? 500 billion. I don't even know what it is. I'm not sure what the number is. Maybe it's 150 billion, but it's worth billions and billions of dollars because of Metcalfe's law. You can look up Metcalfe's law yourself, but Metcalfe's law is kind of the short and ugly version, is the network value, or the value of a network, is proportional to the square of the number of nodes. What does that mean? It means, the short version is, as the network grows, then the value of the network grows exponentially, right? So the Bitcoin network continues to grow. And as that Bitcoin network continues to grow, the value of it will grow exponentially. Logarithmic chart rather than just a regular chart. And so the fact that it is both a network and store of value and a way for it to be a medium of exchange means that as this network grows, we're going to see Bitcoin continue to skyrocket. Right now, again, worldwide, 100 million users. The beautiful thing is, anywhere there's an internet connection, you don't need to set up a bank account. You don't need to, go into a Wells Fargo branch in sub-Saharan Africa, right? Or Indonesia, or, in the jungles of Brazil. You don't need to do that. If there is an internet connection somewhere, then you can exchange with somebody else from your ledger, from your little device to their device, from your wallet to their wallet, without ever having a bank account, without ever setting any of that up. It is a thing of beauty, and it is disrupting the entire market.